Hey, folks, welcome to InTheMoneyStocks.com's verified investing trade setups and action video. My name is Gareth Soloway, Chief Market Strategist and Master Trader here at InTheMoneyStocks.com. Today's date is Tuesday, November 19th, 2019. So let's talk a little bit about what's going on in the market. I'm going to cover various charts. We're going to look at trading opportunities here in this video. I want you guys to get a firm grasp of where the market could be headed in the coming days. First off, S&P is essentially flat today. Now, the interesting thing about today that gets my attention is that we have gotten a little bit of a float, but there was more early institutional selling than usual. So if you look at the past few days, right, so just going back to Friday, we opened higher, we had a little bit of a sell-off, then we went into float mode the rest of the day. Yesterday, same thing. We opened slightly lower yesterday, still had the little selling, and then we went into float mode the rest of the day. Today, we opened higher, and the selling lasted a lot longer. Now, we still have gone into a float here, as you can see, but it's just interesting to see if that's a change in character, and it's something I'm paying attention to as a market strategist and master trader here, just watching for that turn, because let's be honest, we know the signals are out there. We know the signals that there's going to be a pullback at some point. The question is when, right? Is it tomorrow? Is it a week from now? Is it a month from now? Some of the signals that I pay attention to, the put-call ratio is extremely low, meaning there are way, way, way more calls out there than puts. What that tells us, if you look historically, is that when it's very lopsided in that respect, the markets are borderline a pullback. For instance, the put-call ratio is as low, if not lower, than we were in 2018 towards the end of the year before that 20% decline in the S&P. If you look at each decline this year, each pullback, whether it was a 5%er or different, the put-call ratio was in the same range as it is here. So it doesn't necessarily tell us the dramatic decline that it could be. Could it be a 5%er or a 20%er? What it tells us is that it's borderline occurring because, again, history shows us that every time this indicator is here, that is what happens. Another thing that gets my attention that's a little worrisome for the markets is that the CME raised its margin requirements. So, here we are talking about, the media, the talking heads are talking about the great recovery, animal spirits, the economy is going to start to rev into 2020, all these good things, maybe the trade war coming to a conclusion. So why is the CME raising its margin requirements? And what that means, folks, is essentially, let's say on the E-minis, you're given X amount of buying power for every $10,000 you have in the account. Let's say X amount, let's say 50,000 or 100,000. What they're doing is they're reducing. They're not giving you as much buying power. The only reason they would do that is if there was something lurking out there that was concerning to them, because if the markets come down hard, they actually can get in a lot of trouble. Brokers can get in a lot of trouble and so forth by having people have too much margin if they can't cover the margin if it drops. So again, it's not something that I can say tomorrow is the turn or next week or whenever. It's saying that the signals are there for at some point in the next short term, I would say in the next few days to a couple weeks, you'll have that beginning corrective move. All right, so I just wanted to go over that because I do think it's important for us average investors out there to really be aware of what's going on. All right, so those are the couple things that are catching my eye. Another thing that's worth noting is that a lot of the big leaders like Apple are extremely extended. So if we go to a daily chart here, let me flip over to a daily chart of Apple. Let me do that really quick here. And let's see here. If we flip over to the AAPL chart, and we'll flip over to the daily chart on this. Bear with me. So on the Apple chart, the distance from here, so the 200 moving average to Apple currently is the furthest it's ever been away from the 200 in really recent history. All right, you can go back on the daily chart and find other differences. The only thing that's kind of even close would be the difference between when it put in a bottom here in early 2019 and the 200 right here. It's actually a further distance, though. If you look at this distance from here to here, this is much, much more dramatic. But look at the move it had from, see how extended it was, and then look at the surge. So does that tell us being this extended, we're going to have a big corrective move? Very possibly. I think you will. I think you're going to have a pullback on Apple in the short term back to this pivot high right here around $230 to $35, which would actually be a big corrective move. That would be over a $30 decline, over 10% drop in Apple shares if that decline does occur. What that would do is it would bring it at least within a reasonable distance of the 200 moving average. Remember, you don't necessarily have to come in and hit the 200. It's just an indicator of the distance, all right? When something gets far away from a moving average, extremely far, it's like being away from your home base. For instance, ask Napoleon, right? Well, you can't ask him, obviously, he's dead. But one of the reasons his conquest failed was because he got too far away from his supplies. Moving averages are like your food, all right, your supplies. So when you get too far away, a stock inevitably has to come back, or an index has to come back to that level to re-energize or get fed. All right, and again, I hope I'm making sense here for those of you that are intrigued by this kind of talk. All right, so in any case, those are some of the things that we're going over here. I want to talk about Home Depot, which reported earnings today. The stock is getting hammered down over 5%. We did have put options on this in verified option alerts, and we did take a 23.5% gain on these put options today. So that was a nice winner for members if you're a member of verified options. I have two services that I run. I run verified options. I run verified investing. Investing is for swing trading. Verified options obviously is for options. But in any case, nice winner there. Yesterday we had Teva calls that we took profits on, a 20% gain on those as well. All right, so where could Home Depot be going? So I think Home Depot is ridiculously extended. The guidance and numbers today were horrendous. I think you have a lot of buy the dippers that are coming in here, which is why it's not down more. You might think this is down a lot, folks. It's not down that much, considering what it's run. If I zoom out on the chart, you'll see, look at this. I mean, look at that little dip right there from just the 2019 low. So, I mean, that's ultimately, I think it's going to the 200 here. There's a gap filled down here. I think this is where it's headed. I don't think it'll get there in the next couple weeks. I think it's going to take a little bit more time. But once the market starts correcting overall, once you see bigger down days of 1-2% on the S&P for a few days, I think that's where this will start to get thrown out by investors because of their weak numbers. Now, yesterday I put out an article talking about CGC, Canopy Growth, into a major support. The stock is bouncing off that support. If you saw that article on our blog, you would obviously be aware of that. The reason I knew this would bounce is the only pivot high, the only support down here. See this chop right here? And then you have this line right here. Look at that, folks. Pivot, consolidation before the breakout right there above it, retrace to the scene of the crime. Classic chart setup there. And again, you're actually getting a bottoming tail on the weekly chart here that's worth noting. All right. So these are just kind of insights into what we can do here. Canopy Growth, great move here. I love the whole pot sector, the marijuana sector. You might say, well, why do I love it? Because it's been pounded so much. But honestly, that's one of the reasons I like it so much. So whether you're a Tilray fan, you can see this on the weekly chart. Back last year was at 300. It's now at 20 bucks. So, I mean, these things have been beaten, bludgeoned, whatever you want to call them. This is the daily chart showing how low it is. But just this year alone, Tilray was a $100 stock in January. So, I mean, this is down 80% off those highs. So, what that means is expectations have been lowered dramatically. Dramatically. Okay, that's good. As investors getting into it, that you want expectations to be rock bottom. Because then it doesn't take much for a company to beat those expectations. Okay, so in any case, just keep an eye on these stocks. I'm also a big fan. I've talked it up to my members here at InTheMoneyStocks.com in verified investing and verified options based on the fact that during recessions, at some point we all know we're going to have a recession, right? I mean, that's just the nature of things, whether it's, 6 months, a year, 5 years, 10 years, whatever it is. There is one coming at some point. And the idea is that just like alcohol, people don't cut back on these type of things. If anything, people sometimes drink more alcohol when they don't have a job or, they want to forget their troubles. The idea is that marijuana likely won't see a decline in use, THC, CBD, during those periods. So it's almost like an anti-recession play where you could probably play these and actually do pretty well during a recession. So these are on my radar in case we do start to see a slowdown for a place to park money. I think smart hedge fund managers will do the same as well. All right, that's all for today, folks. I'm not going to bore you with too much more, but I hope you enjoyed this video. If you want to join my services, come to Verified Investing or Verified Options for Options at InTheMoneyStocks.com. You can find it under my name, Gareth Soloway, on our homepage. You can see my track records for both services on each page, verified track records, mind you. So again, you can see exactly my performance, and ultimately the performance for the last decade really is up there as well. And you can see even year to year. So it's pretty cool to be able to see that. Have a great one. I hope you come join and participate in our profits. Have a great one. Take care.